In this presentation, we will take a look at how to allocate insurance costs within our personal QuickBooks file. Here we are. For more accounting information and accounting courses, visit our website at accountinginstruction.info. On the home page, we currently have the Open Windows open. We can open the Open Windows by going to the View drop-down and selecting the Open Windows list. We're now going to take a look at the balance sheet by going to the Reports drop-down, scrolling down to the Company and Financial, and then down to the Balance Sheet Standard. We're going to change the dates by going to the Customize Reports up top, changing the date range from 01/01/20 to 12/31/20. That's January through December, the current year we're working on, 2020. Then we're going to go to the Fonts and Numbers tab, change those fonts and numbers to 11, just to make them a little bit larger. At least we will here. You may not need to there. We're going to say OK. Here's what we've got so far. We've been entering data into our system mainly as it happens through the bank statement. Some items, however, when we pay for them, we don't pay for them monthly, so it can kind of distort our monthly financial statements. One way we can deal with these items is to use the balance sheet and record prepaid assets that will then allocate over the time period that will be covered. And the most common example is used for insurance, different types of insurance, because by definition we pay for them before we consume them. But this same idea might be useful for many different items that we have on our personal finances. So now let's take a look at the profit and loss and see what we've spent so far for the medical insurance. So we'll go to the Reports drop-down, Company and Financial. We're going to take a look at the Profit and Loss Standard, changing the dates from 01/01/20 to 12/31/20. That's January through December 2020. Let's customize that report as well, going to the Fonts and Numbers, changing the font size to 11. Okay, yes, and okay. All right, so if we scroll down this item, then we have our insurance. Oftentimes, we don't pay for insurance all at monthly. We might pay for it on the quarter, or we might pay for it yearly or semi-yearly. So if that's the case, then if we compare, for example, January and February, we might get a distorted view of what's going on. So let's us here run an example of January compared to February and see what the difference is. Now, our medical insurance, we actually paid on the 2 months, but we'll see the same kind of phenomenon that will happen in other accounts as well, including the tuition payments that were made for the school. So in our education tuition payments under college costs, we're going to have a similar phenomenon here, whereas we don't possibly pay every month on the tuition payments. Possibly we pay more all at once. So let's see what will happen if we go to the Customize Reports up top. I'm going to change this to just February. I'm going to say 02/01/20. That's February 1st, 2020 to 02/29/20. So the month of February, February 1st to February 29th, 2020. And then we'd like to compare that to the previous period. So we want to look at the previous period comparison, and then I want to look at the dollar change. So that'll give me the January as well, and then look at the dollar change between the two of them. So we'll say OK. So here we have February, here we have January, and the dollar change. So you'll note here with the college funds, we have nothing in February, and we have this amount paid in January. That's the typical kind of thing we'll see. So when we start doing month-by-month comparisons, we'll start to see these items and say, you know, I was still going to school in February, and it makes January look bad that I have this $1,000. I paid it in January, but you start to think, well, it's kind of not fair to February. It's kind of not fair to January because it makes my budgeting look bad. So from a cash basis, I did spend that there, but it's really helping February as well. So then you start thinking, well, maybe it would be good to have on an accrual kind of basis this allocated to the time periods where it would actually be effective. Now, so it happens here on the college costs. It usually happens in things like insurance. Now here we happen to pay 2 months in a row, but we're going to say that this first $500 was made for the first 6 months. We made a $500 payment, and then we just decided to pay for the rest of the year. So this $1,000 is for the entire year, we're going to say, of 2020. And that just to give an example, because the insurance is usually the most common example that this happens. But any type of comparison, you'll see the same thing happens here with the medical costs. Prescription drugs or something like that might be something as well that we don't buy monthly. We might buy, 3 months worth of prescription drugs in this month, and then they'll be good for the next 3 months. Well, if that's the case, we would use the same kind of allocation method that we're going to talk about here. We're gonna assume that this first payment here for January on the medical cost was actually for January through June, and then the second payment was for July through December. So let's make that assumption and think about, well, how would we do this then? Well, if we double click on this 5,500, we see this $500 payment. I'm going to double click on that. When we entered it into the system, we decreased the cash because that's what we saw on the bank statement. And we put the other side to just insurance expense in essence. Well, if we want to allocate it over time, what we should do is put it to prepaid insurance and then record a certain amount each month that's going to be allocated that we actually spent for that month worth of use. That would be more on an accrual basis method. So what we'll do is we'll make a new account here. We'll call it prepaid insurance. So we're going to say prepaid insurance is our account, and we'll put that on the books and say set that up. It needs to be an other current asset type of account. So I'm going to select the drop down and select other current asset type of account, and then OK. So we'll set that up, save and close. That's the one we want. And then we might want to put in the memo this is for 6 months. So we're going to say for 6 months, January to June. And that'll be our information. We'll then save and close this and say yes, save and close. So now we would enter the same information but not go into an expense, but rather to our balance sheet account up top. So if we go to the balance sheet, now we've got up here this 5,000 in the prepaid insurance. Here it is, prepaid insurance. So because the mutual funds were taking up a lot of space here, so here's the prepaid insurance. We didn't do that per se to make the balance sheet look better, because when we look at the balance sheet, that's not like I can spend that anywhere else. But I want it up here to take it out of the income statement so that we can then allocate it to the income statement over the time period. So in this case, January then would have had 500 divided by 6, or $83 worth, 83.33 of insurance for January. So then we'd have to go in and actually record that to January. Now the easiest way to do that without journal entries is to go to this account, because it's not a cash account now. We're doing kind of accrual stuff here. But let's see, so we'll go to the lists and chart of accounts, and we'll use the register. So we'll go to chart of accounts. We can't use the expense registers because they're not set up the same. We have to use the balance sheet account registers, which in this case is that other current liability that we just set up, the prepaid insurance. So I'm going to double click on that, and we're going to say that, okay, as for January, I'm going to do it at the end of January, 01/31/20, January 31st, 2020. We're going to say that we had a decrease of 83.33, and the other side is going to go to now insurance expense, insurance, medical, and tab, and this is for month 1 of insurance, and paid on, and when we paid it on 1/26, but we paid it afterwards. That's okay. We're going to say okay. And see what I mean here is usually we pay for the insurance before, but we paid $500 in January, and it includes January's insurance, but also January, February through June. So if we do that, then we're going to say how much is left in prepaid. As of this point in time, 500 divided by 6 months times 5 months left, which is the 416. So that's how much is left over. So if we close this back out and I close this, then and we go back to the balance sheet, we'll say, okay, we brought that down for the end of January to 416. And if we go to the profit and loss, then now we've got only 83 in January. This second payment, we're going to say that that was made for the second half of the year. So I'm going to double click on that item, and we're going to say we shouldn't have expensed it at time of payment, but allocated it out through the year. So that's going to be July through December. We just decided to pay the entire year now so that we can just have it paid. So we're going to say this should go to prepaid insurance then. And then say save and close. Yes. Yes. So if we close this back out, now we have what we allocated to January and nothing for February. On the balance sheet then, we've got the 916. 916 representing the fact that we now paid $1,000 for the entire year, January through December. If we divide that by 12, we would get 83.33 per month times the number of months left so far, 11, and that's the 916. So now we're going to say that February has passed. So we want to go to February and do the same thing. So we're going to say, let's go back to our chart of accounts. We're going to go to the prepaid asset. So the prepaid asset, which is prepaid insurance, and that is the 916. Double click on it, and we'll say that this happens as of 02/29 to yeah, that's right, 02/29, February 29th. One more day and leave. So we're going to say that this is 83.33. Again, one more month has been expensed. And then insurance for the medical expense is the other side. And so you could see the trend that would happen here. We would do the same thing for March. When March goes by, we're just going to say this happens on 03/31/20, and we can say that March is going to be another 83.33 to insurance, medical. Right, and then we're going to say that April 04/30/20 is going to be 83.33 to insurance, medical. May 5, just going to say 30/20/31/30. It's going to be 83.33 to insurance, medical. Right, and if we did this all the way through December, this amount would then go down to 0. The prepaid insurance would go down to 0. So I'm going to close this back out. If we go back to our balance sheet, as of now, the end of February, 02/29/20, now we have this 833, which represents the 1,000 we've now paid for the entire year divided by 12, which is that much per month, times how many months are left. Well, 2 months have gone by, so there's 10 months left, and that's this 833. If we go to the profit and loss, comparing January and February, now we've got the 83 and the 83. So the pros of this method is that it properly allocates what's being consumed. That's called on an accrual method. And it doesn't have that problem of this big lump sum being paid, say, in January, in February having nothing, even though February is benefiting from that big lump sum. So when we're making decision making, there's a trade-off between the cash flow and our performance, which is more properly measured by allocating on usage. And so this is allocated on usage. So those are the pros and cons between those two. You could either do it this way or just realize that anytime you see something like that, if I'm comparing January to February, for example here, I know that February I went to college or what I had the same costs there. I just happened to pay for them in January. And when we consider our budgeting and when we consider how well we're doing or what net income is from January to February, we need to consider that and say, oh, well, we didn't do better in February simply because we paid the college tuition in January, because it's benefiting both sides. We can either just think of that mentally and do some work as we go through these reports, or we can do this formal process for any time that is applicable by having a prepaid insurance and allocating on an accrual type basis. For more accounting information and accounting courses, visit our website at accountinginstruction.info.